Hi all, my name is Malika and today we are having Gauthier Pons de Vincent. Gauthier is a manager partner at Block Sapiens and an experienced investor. We are happy to see you today here, Gauthier. Thank you for coming.
Thank you for having me.
For how long are you in crypto and how did you first become interested in crypto?
Basically, for how long? Actually almost 3 years now. I started getting interested into crypto since university. I was in a major in finance at Hull University in London. Decided to take some courses, fintech courses, and try to dig in a little bit more in crypto. We went on the first, the last bull market as well. So I started seeing a lot of interests. I came pretty lately, to be honest. And then started working, over 2 years ago, fully in the industry.
Thank you. And what do you think? What are the most promising areas within Web3 that you believe deserve VC attention?
So I don't really think that there is for me there is no much promising areas. I think it's very hard to find what's the next blue chip. But one of the issue in Web3 is that a lot of VCs sometimes are trying to look for chase the hype and try to find the next thing. I'm not sure it's it's the best way. I think the best at the moment is to find businesses that are sustainable, sustainable business model, sustainable teams, whether it's in DeFi or NFT space. For me, it doesn't really matter. Also, I think it's important also to have companies that have real life use cases, real life Web3 use cases, such as compliance solutions, payment rails, user acquisition centric platforms, that in B2B. Also on the B2C side, I think there's a lot of interesting stuff, everything, that try to implement Web3 components, but just it needs to make sense for users, it needs to be easy, to ease the overall experience for users. Because right now we have ChatGPT, we see with the arrival, the rise of AI, it's pretty easy to do pretty much anything, so we need things that have, easy experience for users. There's also obviously an area that's been super interesting lately is obviously the infrastructure side of the Web3 industry. I think it's during bear markets people pay more attention to infrastructure, basics like different layers, layer 2 technologies, zk rollups, also like self-sovereign identity as well.
Thank you. Can you please explain the due diligence process for Web3 startups seeking VC funding?
Well, for VC startups, I think they need to understand what kind of investors they're looking for. The process really depends on the typology of investor. If you look at business angel, most of the time they write check after having a call with a founder. Really get along with the founders. But if you look at the process of VCs, it's much more a detailed process, and even more during the bear markets. We've seen the process going from 1-2 weeks to now 3 months, where we see founders struggling raising funds for a long time. But basically most of the time how it looks is a first call with an analyst or investment associate that will just scratch the surface, try to understand the project and the founders. Then in the second time, it's more the analytics part, where if the fund sees some interest from the general partners, then they start digging into all the investment materials, which include obviously pitch deck, the metrics, financials, tokenomics, also compliance as well. Compliance, there's been more and more interest, around compliance. Say obviously since what's happened, lately in the industry, we're trying to really understand, regulations behind if a project is feasible or not. But yeah, this is usually the classic process. And then if they see, they usually have other questions, they organize another call. So most of the time it's around 3 calls before really talking about allocating capital to a project.
Thank you. And what is your criteria for evaluating a Web3 project's potential for investment?
Well, the criterias, I guess it really depends also on the stage of the startup. For example, for early stage startup, I think one of the most important criteria would be around the team. The team is just super important when you have an early stage project, because they're the one that can make something happen, and they also need to have, I think, a very good network, advisors, a good community around the project. Sometimes you see very good, so also obviously it depends on the type of project. I would say if it's a tech project, and we only techies, in the project, it's not so important. But if it's a business, and they need to, and they, for example, like the B2C oriented, they need to have, kind of a big community. On the B2B side as well, because it's important, if you want to start signing deals with, let's say, big corporate giants, for example, you need to have a kind of a network already. So I think this is important from the team. Other than that, I would say obviously the pitch deck is, we tend to talk about the pitch deck very academically, but pitch deck is really reflect the how prepared is the founder. More the pitch deck is strong, more the founder will be prepared most of the time on different aspects. Obviously, if they have everything integrated in the deck. I would say also it's very important to have a clear roadmap. Clear roadmap, seeing like what will be the different rounds, because sometimes you talk with founders and they have they know how much they want to raise, they know how to value their company, but then they don't know what would be the next step. It's always important to understand what would be the exit for an investor, for example. At the end of the day, the pitch deck is really here to sell to the investor, a company, but also a return on investment. So having the clear roadmap, explaining what's going to happen 1 year, 2 years, 3 years from now is very important. Then for later stage, obviously the metrics, the financials, very important.
Totally. Thank you. And how do you determine the long-term viability of a Web3 project, especially given the nascent and rapidly evolving nature of the space?
I would say, the viability of the long-term viability of a Web3 project will depend on, different metrics. But first, I think obviously the retention, the customer retention, user retention is super important. Those metrics will be super important for Web3 projects going into different cycles. Also, I would say the preparedness to different market cycles. We're in an industry that has much more distinct cycles than in a traditional Web2 industry. So it's important for founders to be ready to have like to be hit by a bear market. We hope it won't be like that for the whole lifetime of the industry, but for now it's how it is. So I think it's how we've seen like serial entrepreneurs, people that have been in the industry for quite a long time, survived because they understood different market cycle. They really kept momentum also, and took care of their communities. That's very important. I think one other thing also is really to share like the advancement of the project, show the growth on a monthly basis. This is super important to keep the momentum.
Thank you. Gauthier, how do you distinguish genuine Web3 innovations from overhyped projects?
I think for us, I think it's pretty easy actually. When you see like a project with a lot of PR around them, and you see that everyone is talking about this new trend. Sometimes we really know that it's sometimes, most of the time we know that it's already too late, and that it's already a hype. When you see that it's a project, and not much people are talking about it, but it's clear that there is some interest, then you can start seeing like real innovations. The hypes are always like they come always with a lot of PR, and which makes sense, and a lot of people talking about it, but not much happening.
Yeah, thank you. And have you ever invested in a Web3 project that turned out to be a scam or a major disappointment?
Well, actually, many of them, unfortunately. It's always like that. I think at the end of the day, in Web3 VC, you need to limit those kind of projects, but you will always, find those kind of projects. And it's sometimes, it doesn't look like. For example, we invested in back then in Terra, and No need to explain why it was a major disappointment for us. But sometimes you see those kind of like I say, hype projects. Everyone talk about it. With the founders, well packaged, good packaging. The founders acting most of the time like gods. And like and then you understand that most of the time those projects are projects or companies, because big companies like FTX, that crashed, are not necessarily the ones that are the most ethical projects.
Thank you. How do you feel about people saying that VCs can sometimes stop Web3 from being decentralized?
So I think I think it's not necessarily a true argument for Web3. I think that Web3 companies at the moment generally need funding. They're not auto-sufficient. So because it's a very innovative technology, and we need funding to make up things. And now I'm talking for like Web3 companies. For infrastructure like products, it's even worse. That you need to raise pretty huge amounts of funds to have something on the rail. I think also there are also two types of companies in Web3. Obviously, you have like I mentioned, the infrastructure ones that rely highly on blockchain, and then you have the ones that are using blockchain as a mean, but they don't necessarily, like, they could be detached from blockchain. And so if the company is highly decentralized, let's say an infrastructure company, it's very hard for VCs, even if they have a stake, they rarely have more than 20% of the stake, even less when it's token. So it's very hard for them to take decision, and actually add their decision process. And on the other side, like a Web3 company that that has raised an equity, that has no token, but that's still in Web3. Obviously, it's more centralized, right? And the VCs have more power on it because they have equity shares. But yeah, I think it depends on the company, I would say. But right now, if you look at really decentralized companies and tech, there's been a lot of cases where actually VCs were thrown out there, and make do anything against the community, that were voting against different decision.
Yeah, thank you. And how do you handle situations where the founders of a project disagree with the direction VCs want to take?
I think VCs should always, try to advise rather than take initiative, and if they come with an idea, they better be able to show the value they bring to the project. Unfortunately, there's still like a lot of VCs, in Web3 that don't bring much value, and sometimes they think that referring partners or referring new companies, new service that will it's seen as value, but at the end of the day, the project is not. They have to pay for that, right? For the service. So we see with different, for example, like incubators, accelerator, where it's where they really help on everything, but they have also the team for it. On the VC side, they don't have so much, they don't have big teams most of the time. They're 4 or 5, at least the average AUM type of VC. But yeah, I think if they bring even if they bring value, they will never be like 24/7 on the business like a founder. So it's very hard for VC to take over with a founder, in my opinion, and it shouldn't be. I think VC should be more here as like advisors, and if founder or CEO decide to take a decision, they should go with it, I believe.
Totally agree. Thank you. And how has the rise of Web3 influenced the strategies and perspective of venture capitalists in recent years? Obviously there is for Web3 funds, the perspective has completely changed from traditional VCs. I think for 2 reasons. Obviously, there's a venture capitalists that have been seen, outrageous returns during bull markets, 16x, 18x. That they've seen it's very compelling as an investment, and
And on top of that, the life cycle is shorter in Web3. When you invest in a token, the life cycle is way shorter than like investing in equity in a with a traditional VC fund, where you see for a traditional VC fund, the life cycle most of the time looks more to be like before an IPO, at least 10 years before an IPO for a startup. They have to go through different series of rounds, Series B, C, D, E, F, and until the IPO. Right, while most of the time for Web3 projects, the life cycle and timeline is shorter. We see like maximum 4 years, and then you see a token launch, and there's more liquidity for funds. So it's definitely more compelling for them. There's higher returns and shorter life cycle. So yeah, it's definitely changed the perspective. We've seen a lot of VCs actually even becoming sometimes half hedge funds, with liquid positions, and trying to short sale their token, or basically what happened with Terra Luna, for example, from some VCs that I will not cite. But yeah, the perspective has completely changed. There's, I would say, more liquidity, big higher returns.
Thank you. And Gauthier, how do you envision the future of VC funding in the Web3 space?
I think it's. I think it will. We believe, we at Block Sapiens with our company, we believe that we'll have we'll have like a different type of funds. There's been the rise of obviously decentralized autonomous organizations, and it worked, but it's proven to be working. But I think it's still like very early, and we don't see so much DAOs out there. We know being in constant communication with funds, and really see the struggle that they have to bring LPs, and raise funds. I firmly believe that the type of funds, the way they will be structured, might be different in the coming years. So be more open to communities, open to high net worth individuals. Obviously, if institutional get into the industry as well, there will be much more money from high net worth individuals getting into blockchain VC funds. At the moment, it's not necessarily the case. You don't see any institution providing this kind of opportunity to investors. But I think I think it will change this way. Syndications as well. It's more accessible for anyone, and yeah, it gives the opportunity to limited partners to have a stake in private rounds. So yeah, I think it will change this way.
Thank you, Gauthier. And my last question is, what advice would you give to a newcomer in the crypto space looking to start investing?
Well, looking to start investing, obviously, if it's investing into crypto, right now is definitely the right timing. I don't want to give investment advice, so I won't really give example or names, but right now the market, has been at its lowest. Obviously, it's gone up, with the announcement of BlackRock, in potential ETFs. But yeah, definitely look at the market cycles. Try to get in, when it's at its lowest, and then maybe wait. I think it's the most, people that won are the ones that's really waited and were here on the long term, instead of starting trading, and try things that you don't necessarily know, and then you can basically lose everything. I would say, invest in what you understand. So really do a lot of research before investing investing in a token. Do a lot of research. Try to really think when you invest that your money is gone for the company, so then you can leave it on the long term and reap the benefits after 3-4 years. And then otherwise there is also obviously the equity side, or pre-sale tokens, so that are not listed. So on this side, there will be need for more due diligence, and for the person that wants to start in crypto to get more involved, get into communities, and try to see where they can get very early, so before listed, or even get equity chunk. Unfortunately, the only difference is that it will require more capital than if you want to invest in liquid markets, like on crypto.com or any centralized exchange, or even decentralized exchange.
Thank you so much, Gauthier. It was a pleasure meeting you and talking to you.
Thanks, Malika. Thanks so much. You too.
Thank you.
Bye-bye.
Thank you. Bye.